Did you know that you could owe thousands of dollars back to Social Security even if you've already received the money? There's one rule that catches a lot of people off guard. It's called the earnings test, and it's probably one of the most misunderstood parts of Social Security. Let me walk you through 5 common questions that I get about the earnings test so that you don't end up in a similar situation. So the first question that we get often is, will I lose my Social Security benefits forever if I keep working? The short answer is no. You won't lose the Social Security benefits forever, but if you're under full retirement age and you earn too much, your Social Security benefits will be withheld. So here's the key point. Social Security recalculates your benefit at your full retirement age and gives it back to you slowly through higher monthly payments for the rest of your life. So yes, you get it back, but it's not like a kinked fire hose that suddenly starts flooding your bank account with money. It just trickles back to you over your entire life. Now, the next common question we get is, how much can I earn before my benefits are reduced? So in 2025, if you're under full retirement age, the limit is $23,400. So if you earn above that limit, you're going to lose $1 in benefits for every $2 over that limit. In the year you reach full retirement age, that limit jumps to $62,160, and you lose only $1 for every $3 over that limit. So here's where it gets tricky. Let's say you earn $110,000 in the year you reach full retirement age on July 1st. The Social Security earnings test only counts towards those earnings before you reach full retirement age, in this case, January through June. Since you earned $55,000 during those months, which is below the 2025 limit of $62,160, you wouldn't lose any benefits due to the earnings test in that year. This is part of what the Social Security Administration cleverly calls their special rule. So if you Google Social Security special rule, you'll find the explanation right on their website. So the third common question that we get all of the time is, does it matter if my spouse is still working? So if you want to take your Social Security, but your spouse is still working, does it matter that they're still working? So the short answer is no. Social Security only looks at your earnings when applying the earnings test to your benefits. So your spouse could be making $200,000 a year, and it doesn't affect whether you can receive your benefits. Now, it can get complicated if you're applying for spousal benefits based on your spouse's work record. For one, they need to have already filed for their own benefit in order for you to get your spousal benefits. So if they're still working and they're below full retirement age, they're probably not going to file for their benefits because of the earnings test. And even then, filing before full retirement age can provide you less than your maximum benefit because you max out your spousal benefit by waiting until full retirement age. Now, if you have your own working history and you don't mind getting a reduction in benefits, not due to the earnings test, but because you're filing before full retirement age, you might take your own benefit first, then switch to your spousal benefit, assuming it's higher, when your spouse files. Now, the next common question is, what types of income count towards the earning test? So if I get dividends and interest, does that count? If I have a pension, does that count? What if I pull money out of my IRA? Technically, from a tax perspective, that's ordinary income, but does that count toward my earnings test? So the answer is none of that counts. The earnings test only applies to earned income. So wages from a job, your gross income. So if you make $100,000 a year and that's what shows up in your W-2 income, that's what's going to count toward your earnings test. So if you're self-employed, it's your net income from self-employment. So the number that matters is your net earnings after expenses as reported on your Schedule SE of your tax return. It's not your top line revenue. It's your income after deductions like mileage, office supplies, and so on. So the last question, and perhaps the most concerning to people and also the most important, is that how does Social Security know how much I'm earning? They rely on what you report. So each year they ask you to estimate your earnings if you're getting benefits and still working. They'll withhold benefits based on your estimate, but later they're going to reconcile it using your actual tax return. If you underestimated and earn more, Social Security may stop future checks to make up for the overpayment. If you've earned less, you may get some of that money back to you. What if I get it wrong? What if I think my earnings are going to be X, but they're Y? What if I think they're Y, but they're X? As long as you're making a good faith estimate, you're fine. Honest mistakes happen. Social Security Administration knows this. But if you're knowingly underreporting your income or ignore Social Security's follow-up request for some type of proof of earnings, you could face penalties. You'll have to repay the overpaid benefits. There could be civil fines or even criminal charges for fraud if it's actually intentional. So the best approach is be honest. And if your income changes, let Social Security know. If you're planning to work while collecting Social Security before full retirement age, you have to understand the earnings test. Knowing the rules could cost you thousands or even get you in trouble with the Social Security. And if you're not sure, talk to somebody that can help you navigate it before you file. At Paces Ferry Wealth Advisors, we've helped hundreds of people determine the Social Security strategy that's right for them. If you'd like to see how we could help you, please find a link in the video details. Thanks for watching.